Time now for the markets with Leighton. And Leighton, Thursday was a big day for ag crop reports.
It certainly was. Crop production, supply, demand, grain stocks, and that's going to be the top story. Also this week in the markets, some big gains for the cattle complex. Hog farmers should wait and see, according to analysts, as the prices for ammonia, a common ingredient in fertilizer, move lower. There was a lot of positioning around the markets this week in advance of the new crop reports that came out early Thursday morning, the 12th. Extension Ag economist John Michael Riley previewed the expected numbers during a conversation with me Wednesday afternoon. John Michael, what was the average guess or feeling about corn prior to these new reports?
Well, they're expecting the ending stock number on corn to come in about 100 million bushels below last month's report, looking somewhere in the neighborhood of 750 million carryover from the current year to the next marketing year. That'll put the stocks to use ratio, depending on where that comes from, it'll put it right at 6%, which is a very low number, lowest since the mid-90s when we were in another tight supply situation. That's a change from 6.7% from last month's report. So the general consensus remains corn supplies are tight, both in the U.S. and globally, and that the demand pressure is still there, but overall it's still looking like a tight supply situation.
All right, and what about soybeans? What was the consensus before the numbers came out?
Not looking for a real big change there. Last month, 230 million bushels of soybeans being carried over from the past growing season to next year marketing year, and that's it's looking to expect to be somewhere 233, 232, 233. So no real big change there is expected. Stocks to use ratio should remain unchanged at 7.6%.
All right, analysts always seem to want to be looking at South America and especially the weather there right now. We've heard so much about hot and dry, but I understand there has been some rain, especially in Argentina in the last week. Is that really going to impact the markets, corn or beans, either way?
It has, and it continues to be under pressure today because of that rain falling in South America, southern Brazil, Argentina. All the talks is that this rain could definitely help as long as they get sustained rains from now through the middle of February. And that is going to help. That is going to put some pressure on prices as it has the potential to bolster those yields down there.
And as far as is there really going to be an acreage battle this spring when we talk about farmers making their decisions on what to plant, how much to plant?
Well, the tight supply situation that we are in, I've already mentioned today, mentioned it time before. As long as with that in place, as long as that continues to be in place, there will be a battle, and the prices will dictate where those acres go. There's a strong need for corn. Soybeans are always going to be there, trying to get their piece of land, and I don't see that easing up this year.
Encouraging news about a key input cost for row crops this week, the price of fertilizer. The cost of ammonia, an important component when it comes to farming, is moving lower. DTN reports that domestic ammonia prices could be headed substantially lower in the short term, and that there seem to be no problems with supply. And we close out the row crop side of the market review with this trivia quiz for you this week. How much of our nation's rice production is located in Mississippi? Is the answer almost 7% or over 13%? Or could it be 19% or even close to 50%? That answer will be coming up later here in the markets. While waiting to find out the government's take on feed grain supplies in the new Thursday reports, cattlemen early in the week were enjoying sharply higher live futures and some triple-digit gains in the feeder cattle futures. Even before this week, analyst Don Rose was of the opinion that cattle has overall bullish fundamentals.
The supplies really for 2012 and years beyond, it's going to take a while to build up the herd. And the real bull story on cattle this next year is the fact that we did not retain heifers. We did not try and expand the herd because of the southern drought. So that's what we think is going to happen next year. And so the upside on the cattle is probably the best of all the meat sectors.
Fast food giant McDonald's new ad campaign is featuring farmers from all across the country. Spokesmen for McDonald's say the campaign tells a story of where the journey begins for McDonald's food. Now, one of the first segments features Western Illinois farmer Steve Fogelsong. He is a beef supplier for McDonald's, and Fogelsong's spot is titled Raising Cattle and a Family. The Midwest producer says, quote, "Those of us actively involved in farming have to be willing to put ourselves out there a little bit and share what we do." The advice for the hog sector this week is wait to expand. Purdue ag economist Chris Hurt says farmers need to know more about the 2012 crop yields and feed prices first before growing a herd any larger. Analyst Jamie Kohaki describes the hog market as being in neutral right now.
Watch the cutouts for a balance to see demand pick up. The big key in the pork market is a seasonal bottom in place, and I think more than likely we have. I've been selling deep out of the money puts in June and July, like $82 and $84 strike puts.
Concluding this segment and heading closer to the future, here's the trivia answer for you. The first choice is the right one. Mississippi produces 6.9% of our nation's total rice output.